You know, that feeling when you open your brokerage app and the whole screen is glowing red? And your stomach does that little drop like you missed a step coming down the stairs? Most people, in that exact moment, end up making the single worst financial decision of their entire year. And here is the part that is going to bother you a little. They don't even realize they're doing it. They think they're being smart. They think they're being careful. But what they're actually doing is the financial equivalent of running out of the theater because someone yelled fire when really someone just dropped their popcorn. I'm Mikey, and I've been watching investors panic through AI corrections since the very first one rolled through back in 2018. And look, I've made some of these mistakes myself, so I'm not standing on a pedestal here. Picture me sitting at the kitchen table across from you, because I want to walk through what actually happens when these AI sell-offs hit. The real mistakes people make are not the ones plastered across the headlines. They're quieter, sneakier, and they cost a whole lot more than you'd think. Here is the metaphor I want you to hold on to for the next 8 minutes. An AI correction is a thunderstorm. Not a hurricane, not the end of the world, just a thunderstorm. Loud, scary if you happen to be standing outside in it, and over a lot faster than it feels when you're in the middle of it. The people who get hurt the worst aren't the ones who get rained on. They're the ones who panic, sprint into the street, and get hit by a car trying to escape a little water. Let me show you exactly what that looks like. On Monday, the 27th of January of 2025, a small Chinese AI company called DeepSeek released a model named R1, and they claimed the whole thing was trained for roughly $5.6 million. The market read that headline and absolutely lost its mind, with Nvidia dropping 17% in a single session, which translated to about $589 billion in market value, evaporating between breakfast and dinner. That number, confirmed by Forbes, Bloomberg, and Reuters, became the biggest single-day market cap loss any company has ever taken in U.S. history. Now picture the person at home watching this unfold on the news. They got Nvidia in their 401k. They got it in their brokerage account. Maybe they bought it at 80 bucks. Maybe they paid 130. They're watching CNBC tell them the AI trade is finished. The bubble has popped, and China just rewrote the rules overnight. So what happens next is almost predictable. They sell right at the bottom, tapping that little red button and walking away from years of compounding. Here is what nobody expected. The very next day, on the 28th of January, Nvidia bounced almost 9%. And by July of 2025, the company became the first business in history to cross a $4 trillion market cap. By late October, the stock touched $212 a share with a market cap above $5 trillion, which meant the person who panicked that Monday morning hadn't avoided a disaster at all. They had manufactured one for themselves. And this is where it gets worse. That $5.6 million DeepSeek figure everyone latched onto turned out to be radically incomplete, because it only covered the cost of the final training run. SemiAnalysis, one of the most respected research shops in the entire chip industry, came out within days and explained that DeepSeek's true infrastructure investment had likely exceeded $1 billion in hardware alone. The headline that triggered the panic wasn't technically wrong, just missing about 99% of the story. And by the time the full picture emerged, the people who sold were already locked into their losses. That right there is mistake number one, woven into a real example, reacting to a headline before you actually understand the headline. The thunderstorm rolled in, and people ran straight into traffic. Now here is where it gets interesting, and I need to pause for a second, because if this is the kind of breakdown you actually want more of, the algorithm only shows this channel to people who hang around past the first few minutes. If you've gotten anything out of this so far, just tap the like button. That is the whole ask. Because it tells YouTube that someone over 35 with an actual portfolio wants to see this kind of analysis, and that genuinely helps. Okay, back to it. The second mistake is the one I think hurts people the most, and almost nobody talks about it, which is the mistake of confusing narrative damage with fundamental damage. When Nvidia dropped 17% that Monday morning, the company didn't lose 17% of its customers, didn't lose 17% of its revenue, and didn't lose 17% of its earnings power. What it lost was 17% of a story, and stories can recover inside of a week, while fundamentals take years to genuinely break. You can watch this same pattern play out across the last decade. Back in 2018, Nvidia got absolutely crushed during the crypto mining crash, ending up as the worst performing stock in the entire S&P 500 during the fourth quarter, with CNBC essentially writing obituaries for the company. 4 straight quarters of negative revenue growth followed, which was genuinely ugly. But anyone who bought that drawdown and held it through to 2024 made multiples of their money. The thunderstorm passed, the sun came back out, and the people who sold their umbrellas at the bottom never quite forgave themselves. The 2022 tech bear market told the same story. Nvidia got cut roughly in half. People swore the AI trade was dead in the water. And 12 months later, ChatGPT launched and the stock took off on the run of a generation. Same thunderstorm, same panic, same regret for the people who bolted into the street. The third mistake runs more subtle. And honestly, this is the one I see hurting people in their 50s and 60s the most, which is going to cash and then forgetting to come back. Fidelity ran a study with Bloomberg backing up the numbers, looking at long-term market returns through the end of 2024, and the findings are brutal. Missing just the 5 best days in the market over a multi-decade stretch left your portfolio roughly 37% smaller, while missing the 10 best days dropped your annualized return from about 10% down to around 6%. Here is the kicker that nobody mentions. The best days in the market almost always happen within 2 weeks of the worst days. They're neighbors living on the same street. What that means in practice is when you sell in a panic on a Monday, you are statistically almost guaranteed to miss the bounce on Tuesday or Wednesday. The thunderstorm and the rainbow show up in the same afternoon, and you cannot see the rainbow from inside your basement. The fourth mistake is for the folks who think they're being clever, and that is treating all AI stocks like they're the same animal, which they absolutely are not. During the November 2025 sell-off, when bank CEOs like Jamie Dimon at JP Morgan started openly warning about a serious market correction, something genuinely interesting happened underneath the surface. The speculative, high-multiple AI names got demolished, with Palantir dropping close to 9% in a single session, AMD shedding 7%, and Oracle posting what was reportedly its worst quarter in over 20 years. The profitable, cash-generating, dominant AI businesses, however, wobbled and recovered within days. Bernie Advisor Services pointed out in their November recap that low-valuation, small and mid-cap AI names were actually being bought during the sell-off, while the speculative stuff was being dumped. That right there is the signal hiding in plain sight. In every AI correction so far, quality has been rewarded and hype has been punished, which means if you own a basket of profitable hyperscalers, companies like Microsoft, Alphabet, Amazon, and Meta, you're holding businesses generating hundreds of billions in free cash flow every year. Those 4 are projected to spend somewhere between $635 and $725 billion on AI infrastructure in 2026 alone, according to Statista and Yahoo Finance reporting. And that is not vaporware. That is real money buying real chips that power real revenue. I want to be fair here, because I'm not telling you everything is fine and you should pour your retirement into Nvidia tomorrow. The warning signs are real. Jamie Dimon said back in October of 2025 that, quote, people are doing dumb things, and that current asset prices remind him of the run up to 2008. Michael Burry, the guy from The Big Short, disclosed in November 2025 that he is holding put options worth around $912 million against Palantir and $187 million against Nvidia. The top 10 stocks in the S&P 500 now make up close to 40% of the entire index, which is a level of concentration we haven't seen since the dot-com peak in 2000. None of that is nothing. Those are real things to weigh when you're sizing your positions. But here is the difference between thinking and panicking. Thinking happens on a Sunday afternoon when the market is closed and you've got a cup of coffee in your hand, while panicking happens on a Monday at 10:47 in the morning, when the screen is red and your heart rate is climbing. The investors who do well in AI corrections are the ones who made their decisions during the sunshine, not during the thunderstorm. So here is where I'll leave you. The real mistakes in AI corrections are not loud, not dramatic, just quiet ones, like selling on a headline you didn't fully read, confusing a story with a fundamental, going to cash and never finding your way back in, and treating a speculative name the same as a dominant one. The thunderstorm is coming again. Probably this year, maybe next month. And when it rolls in, the question isn't whether you'll get rained on, because you will. The real question is whether you'll stand still and let it pass, or whether you'll bolt into traffic. I want to hear from you in the comments. What did you actually do on the 27th of January of 2025? When Nvidia dropped 17% in a single session, did you sell? Did you buy? Or did you sit on your hands and wait it out? There is no wrong answer here. I'm just genuinely curious how this community handled it. If you found this useful, hit subscribe so the next correction doesn't catch you off guard. And I'll see you in the next one.